Hello students, in present video I am going to explain about 8th problem from cash book topic. 8th problem is related with triple column cash book. I am taking this question from Telangana State Telugu Academy Inter First Year Accountancy Textbook. But this video is useful to all commerce students who want to know about triple column cash book topic. On triple column cash book, already I made one video. That video link I am giving in the description box and in icon. In that video, I explained the meaning of triple column cash book, LF number column usage, discount allowed column, discount received column concepts, why discount columns are not balanced, why cash and bank columns are only balanced, etc. basic points. I request you to watch that video first. Then only you can understand this present video. Let us see the question first. 8th problem, prepaid triple column cash book. December 1st, 2018. Cash in hand 10,000 rupees. On the same date, cash at bank 8,000 rupees. Third date, sales 4,000 rupees. On 6th day, cash received from Sunitha 6,800. Discount allowed 200 rupees. On 9th day, commission received 800 rupees. 10th, cash deposited into bank 2000 rupees. On 14th, check issued to Murthy 9600. Discount received 400. On 17th day, withdrawn cash from bank for office use 1800 rupees. On 20th date, goods purchased from Rohith 3,500. 24th, received check from Shyam 3,800. And in brackets he is giving that check is deposited in the bank on the same date. Last transaction is on 31st date. Salaries 1,000 rupees. This is the question. This is triple column cash book table. Even though cash book we are writing, we prepare this cash book in the form of account. This is a center line. Left side is called debit side. To indicate that DR we have to write. Right side is called credit side. To indicate that CR we have to write. Each side we have date column, particulars column, ledger folio number column, discount allowed column, cash column, bank column. Only the difference is on debit side we have discount allowed column, on credit side we have discount received column. Remaining columns are same. If you observe the question, you will notice that he has given the transactions of December 2018. On 1st December, cash in hand 10,000, cash at bank 8,000. These two amounts he has given. These two amounts are known as opening balances. Let us see how to deal with these opening balances. On 1st December 2018, in our firm, we have 10,000 rupees cash balance. Remember one point, triple column cash book we are preparing in firm's books. Therefore, all transactions we have to analyze from firm's point of view. To the firm what is coming, from the firm what is going. On 1st December 2018, in our firm, 10,000 cash balance is there. So cash balance is an asset. Asset shows a debit balance. Therefore, on debit side we have to show this 10,000 rupees. In date column, write down this opening balance date. 1st December 2018. In particulars column, we have to start with 2. And what to write in particulars column? Opening balance means last month closing balance. Problem is for December month. Previous month to December is November. So on November 30, we have 10,000 closing cash balance. So from that date to present month starting date, that is on 1st December 2018, we are bringing that 10,000 rupees in accounts. So to carry forward the opening balance from previous month to current month, we have to write balance brought down. We are bringing the amount from previous month now. That is why we are writing brought down. Don't write anything in LF number because this is opening balance. Related to this, there is no journal entry, and in ledger book, there is no account related with this. Don't write anything in discount column because there is no discount here. Cash balance is 10,000 rupees. Come to next line. Date is not given. When date is not given, then the meaning is same date is applicable. 1st December 2018 is only applicable for second line also. Second line is cash at bank 8,000 rupees. Meaning is this firm is maintaining one bank account. In one bank, we are maintaining one current account. In that account, by 1st December 2018, we have a bank balance of 8,000 rupees. We have favorable bank balance. Bank balance is also an asset. Asset shows a debit balance. Therefore, debit side we have to show that 8,000 rupees also. As same dates are given for 10,000 rupees and 8,000 rupees, again you need not to write date and two balance brought down for bank column. So in same line, in bank column directly you can write the amount. Bank balance is 8,000 rupees. So opening balances we have completed. From next date onwards, he is giving transactions. Financial business transactions. How to record transactions in cash book? For each transaction, you have to think the journal entry. That journal entry you have to post in this cash book by following the posting rules. Let us see the first transaction. First transaction is given on third date. Third date, sales 4,000 rupees. Meaning is firm sold goods and customer's name is not given. Means on the same date from customer we received cash. Now for this transaction we have to frame the journal entry. Any financial business transaction contains minimum two accounts. Those two accounts first we have to identify. As cash is coming into the firm, cash account is one account. Goods are going from the firm. Therefore, goods account is another account. First step is completed. Identification of accounts. Second step is grouping. For that, you should know the types of account. Account is divided into three types. Personal account, real account, nominal account. If any account is opened with a person name or firm's name, that is a personal account. If any account is opened with one asset name, it is a real account. If any account is opened with the expenditure name, loss name, income name, gain means profit name, that is nominal account. Cash is an asset. All assets come under real account. So cash account is a real account. Goods account also a real account, because goods means the articles with which we do business, the articles which we are going to sell to the customers. These articles are assets to us. Therefore, goods account is also a real account. Last step in framing the journal entry is apply the double entry principles. These are the double entry principles for these three accounts. These two are real accounts now, so apply real account double entry principle. Debit what comes in, credit what goes out. If that asset is coming into the firm, debit that asset account. If that asset is going from the firm, credit that asset account. That is the meaning of this rule. Observe which asset is coming into the firm? Cash. Debit what comes in. First line is applicable. Debit cash account. Which asset is going from the firm? Goods. Credit what goes out. is applicable. As per that, goods account we have to credit. And remember, goods word we should not write in the journal entry because this goods word comes in 4 cases. In the case of purchases, sales, purchase returns, sales returns. If you simply write goods word, there is no clarity regarding the transaction. So, instead of writing goods word, we should mention the transaction name. This is sales transaction now. So, write down sales account. So, final entry is cash account debtor to sales account. Observe the accounts. Cash account. We have cash column, but we don't have sales column. Means cash account we are preparing here. Sales account we are not preparing in this table. Where we prepare? In ledger book. We prepare sales account. So, as cash account is debited in the journal entry, this entry debit side we have to post. What to write in date column? Transaction date. 3rd December 2018. 2. What to write in particulars column? Other side, credit side, we wrote it sales account now. That account name we have to mention here. As cash is coming, write down the amount in cash column. Don't write anything in bank column because money is not deposited in bank. Money is not withdrawn from bank. Discount is not involved in this transaction. So, you need not to write anything in discount column. As a student, you can leave this LF number column also. But when you are really working in any organization, with your ledger book will be there. In ledger book, the page number which contains this sales account, that page number we have to mention here. Ledger folio number. Folio means page. Meaning is sales account we posted here. If you want to refer this sales account in ledger book, on which page that sales account you can get, that page number you have to mention here. Therefore, it becomes easy for the accountant to do any cross check. That is the use of ledger folio number column. Next transaction is on 6th date. Cash received from Sunitha 6,800, discount allowed 200 rupees. Sunitha has to give 7,000 rupees cash to the firm. As a final settlement, on 6th date, she is giving 6,800 rupees cash. As she is paying this amount before the due date or on the due date, firm wants to give 200 rupees discount. Think from firm's point of view, this is discount allowed or discount received? Discount allowed means discount given. Firm is giving discount to Sunitha, no? So this 200 is discount allowed. Sunitha has to pay 7,000 rupees to us. As a final settlement, she is paying 6,800 rupees cash to us. We are allowing a discount of 200 rupees to her. This is a transaction. When discount is involved in the transaction, 3 accounts come. Cash is coming to us. Therefore, cash account is one account. Firm is allowing 200 rupees discount. Discount allowed is second account. From Sunitha, this cash is coming. Sunitha account is a third account. Now grouping. Cash is an asset. All assets come under real account. Discount allowed. Instead of receiving 7,000, we are receiving only 6,800. So this 200 is lost to us. Losses, expenses, incomes and gains come under nominal account. Discount allowed account is a nominal account. Sunitha account. With the person name we open this account. It is a personal account. Last step, apply the double entry principles. For real account, rule is debit what comes in, credit what goes out. Think from firm's point of view, cash 6,800 is coming. Therefore, debit cash account. Nominal account rule, debit all expenses and losses, credit all incomes and gains. Discount allowed is a loss. Losses are to be debited now. Debit discount allowed account. Personal account rule, debit the receiver, credit the giver. Sunitha is giving 6,800 rupees to us. She is a giver. Therefore, credit Sunitha's account. You may get one doubt. She is receiving 200 rupees discount. She is a receiver also. Here, give priority to 6,800 rupees, not to this 200 rupees. So, she is a giver. Then, final entry is cash account debtor, discount allowed account debtor to Sunitha account. Cash column, discount column. These two we have here. Sunitha column is not there. Means cash account we are preparing in this table. Discount information we are showing in this table. But Sunitha account we are not preparing in this table. Where we prepare Sunitha's account? In ledger book we prepare that. As cash and discount both are debited, on debit side we have to post this journal entry. In date column, write down the transaction date. 6th December 2018. What to write? Other side, credit side, we have Sunitha account now. Write down that. To Sunitha account. In discount column, 200 rupees. And how much cash we received from Sunitha? 6,800. For bank, nil. Next transaction is on 9th date. Commission received 800 rupees. Firm received commission because firm has given some service to somebody. In return, firm received commission. So what is coming into the firm? Cash is coming. Two accounts are cash account because cash is coming into the firm and income name, that is commission received account. Cash account is a real account because cash is an asset. Commission received account, this is one income. It is one nominal account. Real account rule, debit what comes in, credit what goes out. Cash is coming now, debit. Nominal account rule, debit all expenses and losses, credit all incomes and gains. Think from firm's point of view, commission received is income to the firm. We should credit. Final entry is cash account debtor to commission received account. Out of these two accounts, cash account we are preparing. As cash account is debited, on debit side we have to post this entry. In date column, write down the transaction date. 9th December 18. 2. Other side account name, commission received account. In cash column, 800 rupees commission we are receiving, write down 800. 10th day, cash deposited into bank 2000 rupees. Firm is maintaining one bank account now. In that bank, firm deposited cash. This is the transaction. There are two accounts here. In bank we are depositing money. Therefore, bank account is one account. From the firm cash is going, cash account is another account. Bank account is which account? Don't think that bank means asset, bank balance, therefore it is a real account. Bank means one organization name. As a student, you wrote simply bank word. But when you work in any organization, in the place of bank word, you are going to mention that bank name. For example, HDFC account, ICICI account. With the firm's name, we are opening one account now. It is a personal account. Bank account is a personal account. Cash is an asset, therefore real account. Personal account rule: debit the receiver, credit the giver. Bank is a receiver because we are depositing money in the bank. Debit bank account. Real account rule: debit what comes in, credit what goes out. Cash is going from us, credit cash account. Then the final entry is bank account data to cash account. So this is the entry. Let us see about the posting of this entry. Observe, bank account we have on debit side and bank account we are preparing in this cash book. Cash account we wrote on credit side. Cash account also we are preparing in this book. So the peculiarity of this transaction is, in case of other transactions, suppose see this third transaction, cash sale. Cash account we are preparing in this book, but sales account we prepare in ledger book. Cash received from Sunitha, discount allowed. Cash and discount allowed we are showing in this book, but Sunitha account we prepare in ledger book. Commission received. Cash account we are preparing in this book, but commission received account we prepare in ledger book. In case of other transactions, out of those two accounts, one account we are preparing in this book, another account we prepare in ledger book. But in case of this transaction, cash deposited into bank, debit account, bank account we are preparing in this book, credit account, cash account is also we are preparing in this book. Therefore, two times we have to post this entry. Let us post this in bank account first. Bank account is debited now. Therefore, debit side we have to post this entry on 10th December 2018. 2. What to write? We are posting in bank account. Therefore, other account name we should write now. Other side, credit side, we wrote cash account. Write down that. Cash account. In which account we are posting now? In bank account we are posting now. Therefore, amount should be in bank column. 2000 rupees. There is no discount here. Don't write anything in discount column and don't write anything in cash column also, because in bank account we posted. Even cash account also we are preparing. Observe, cash account is credited in the journal entry. Therefore, this entry, credit side we have to post. Date is same, 10th December 2018. Credit side, in particulars column we have to start with the buy, no? What to write now? In cash account we are posting. So other side, debit side, we wrote bank account, no? Write down that account name. By bank account. As we are posting this transaction in cash account, amount should be in cash column. 2000 rupees. Don't write anything in bank column. Discount is not there here. Don't write anything in discount column. Now come to LF number column. In case of other transactions, in ledger book, the page on which Sunitha's account is prepared, we mention here. That page number we mention here. In ledger book, the page on which sales account is prepared, that page number we mention here. Commission received account, in which page we prepared in ledger book, that page number we mention here. But in case of this transaction, cash account, bank account, both we are preparing in this book only. In ledger book, again we are not going to prepare bank account or cash account. In case of other transactions, half we are writing in cash book, another half we are writing in ledger book. Means every transaction contains debit and credit, no? If we record debit here, then credit aspect we record in ledger and vice versa. If we record a credit aspect in this book, debit aspect we record in ledger book. But in case of this transaction, debit aspect, credit aspect, both we are writing in this book only. Therefore, we cannot write the ledger folio number here. Then what to write? Observe how we recorded these transactions. Opposite side we recorded. To cash 2000. On the other side, by bank 2000. So, same transaction, opposite to each other we have recorded. This is known as contra. Contra means what? On the other side. So, this 2000, if you observe, on the other side, double entry is completed. If you observe this 2000, double entry is completed on the other side. So both are opposite to each other. Therefore, this entry is known as contra entry. Contra word is derived from a Latin word. Contra means what? On the other side. So remember, in case of contra entry, we cannot write the page numbers in LF number. Then what to write? To indicate that this is contra entry, in LF number we have to write C letter. C stands for contra. So in which circumstances contra entry comes? In 4 circumstances contra entry comes. Observe this transaction. Cash deposited into bank. Here contra entry is coming. First transaction is cash deposited into bank. Second transaction is cash withdrawn from the bank. Third transaction is opened a bank account. Because by depositing some money in the bank, we open bank account. Fourth transaction is we received check on one day and on other day we deposited the check in bank. So other day contra entry comes. In these 4 cases, contra entry comes. Next transaction is on 14th date. Check issued to Murthy 9600, discount received 400 rupees. Firm has to pay 10,000 rupees to Murthy. Why? Because firm is liable to him. Once firm may purchase goods from him on credit. Purchase value 10,000 rupees. Otherwise, once firm has taken 10,000 rupees loan from Murthy. On 14th date, firm is settling Murthy's account. How firm is settling this due amount? By issuing a check for 9,600. Means Murthy is allowing a discount of 400 rupees. Instead of paying 10,000 rupees as a final settlement, firm is paying 9,600 rupees only. So this 400 is benefit to the firm, known as discount received. As firm is paying this amount on time or before the due date, Murthy is allowing this 400 rupees discount to us. Giving a check to other party is known as issuing a check. We issued a check worth 9,600 rupees to Murthy. Then what he does? He goes to our bank. He presents this check into the bank. Bank pays cash from firm's account. Okay, this was happened. Now, from this transaction, accounts we have to identify. As discount transaction, this is 3 accounts come now. First account is we issued check to Murthy. Murthy account is first account. Don't write cash account as second account because cash is not coming into the firm. Cash is not going from the firm. Cash is going from bank. We are not preparing triple column cash book in bank's books, no. We are preparing this book in firm's books. Therefore, don't write cash here. As money is going from our bank account is one account. Whenever check is given to us, bank account comes as one account. Remember. And we are receiving discount now. Therefore, discount received account is one account. Murthy account is a personal account. Bank account is also a personal account. Discount received is a gain, profit. It is a nominal account. Personal account rule. Debit the receiver, credit the giver. Murthy is receiving 9,600 rupees from bank. He is a receiver. We should debit him. He is giving discount 400 rupees, but he is not a giver. As 9,600 is more than 400, we have to give priority to this 9,600 rupees only. Murthy is a receiver, debit him. Personal account, bank account. Bank is giving cash, no? Bank is a giver. Credit, bank account. Nominal account rule. Debit all expenses and losses, credit all incomes and gains. Discount received is gain to us. Credit it. Final entry is Murthy account debtor to bank account to discount received account. Out of these three accounts, bank account we are preparing, discount details also we are showing. As these two accounts are credited, this entry we have to post on credit side. In date column, write down the transaction date 14th December 18 by. Other side, debit side, we wrote Murthy account now, write down that. Discount amount 400. As we wrote bank account, don't write the amount in cash column, write down in bank column, 9,600. On 17th date, withdrawn cash from bank for office use 1800. From the bank, firm withdrew cash. Cash is coming into the firm. This is the transaction. Two accounts are, as cash is coming into the firm, cash account is one account. From bank we are withdrawing that cash. Bank account is another account. Cash is an asset, real account. Bank is one firm, therefore personal account. Real account rule. Debit what comes in, credit what goes out. Cash is coming, debit. Personal account rule. Debit the receiver, credit the giver. Bank is giving money, no? Bank is a giver, credit bank account. Final entry is cash account debtor to bank account. Cash account, bank account, both we are preparing in this book only. Therefore, this is also a contra entry. Double entry will be completed in this book only. First, we will post this entry in cash account. As cash account is debited, on debit side we have to post this entry. Transaction date 17. Other side we have bank account now. Write down that. In cash account we are posting. Therefore, amount is in cash column. This is contra entry. So in LF number write down C. Now we post this entry in bank account. Bank account is credited. So credit side we have to post. Transaction date 17th. Other side, debit side, we wrote cash account. Write down that here. This is contra entry. So write down C letter here. And in bank account we are posting this entry. So amount is in bank column. 20th date, goods purchased from Rohith 3,500 rupees. From Rohith we purchased goods. Goods are coming into the firm. Whenever purchase transaction is given, we have to observe whether it is a cash purchase or credit purchase. As supplier's name is given in the question, this is credit purchase. On 20th date, goods are coming but cash is not going. Two accounts are goods account, Rohith account. As this is credit purchase, I am taking supplier's name as one account. Goods account is a real account. Rohith account is a personal account. Real account rule. Debit what comes in, credit what goes out. Goods are coming. Debit goods account. Personal account rule. Debit the receiver, credit the giver. Rohith is a giver. Credit Rohith account. Goods are coming on debit side. Instead of goods word, transaction name we should write. This is purchase transaction. Purchases account we have to write. Final entry is purchases account data to Rohit account. Purchase account we are not preparing. Rohit account we are not preparing. Means this entry we should not post in cash book. Cash book is a part of subsidiary books. Small firms record all business transactions in journal book. Large firms, instead of maintaining journal, they maintain subsidiary books to record all the business transactions. There are 8 subsidiary books: purchase book, purchase returns book, sales book, sales returns book, cash book, bills receivables book, bills payables book, journal proper. Don't think that whatever transaction he gives in the question, all those transactions blindly we have to enter in cash book only. In respect to subsidiary book, that transaction goes. In cash book, we have to record only cash related transactions, bank related transactions. This is not cash related transaction. This is not bank related transaction. This is credit purchase. When goods are purchased on credit, to record that transaction, there is a separate subsidiary book known as purchase book. So this transaction goes in purchase book. Therefore, we have to ignore this transaction. We should not enter this transaction in cash book. Let us move to next transaction. 24th date. Received check from Shyam, deposited in the bank 3,800 rupees. On 24th day, Shyam has given 3,800 rupees to us. How? Not in cash form. For this amount, he issued a check to us. Actually speaking, we should go to his bank. We should present this check and we should take the money. But as we are running business, daily so many checks we receive in this manner. We cannot go to all those persons' banks now. So what we do? We are also maintaining one bank account. So these checks we send to our bank. That is called depositing the checks into our bank. Now the important question is, when we are receiving the check and when we are depositing that check into our bank. In present transaction, we received this check from Shyam on 24th date. On the same date, we are depositing that check into our bank. Sometimes what happens, we receive check on one day, we deposit that check into bank on other day. In coming problems, we'll see about that point. Here, on the same day, firm deposited the check into our bank account. Now the accounts are, as we deposited that check in our bank account is one account. Shyam is issuing this check. Therefore, Shyam account is another account. Both are personal accounts. Personal account rule, debit the receiver, credit the giver. Banker is a receiver. Debit bank account. Shyam is issuing check now, he is a giver. Credit Shyam account. Final entry is bank account data to Shyam account. Out of these two accounts, bank account we are preparing now. As bank account is debited, on debit side we have to post this entry. In date column, write down the transaction date. 24th December 2018. 2. Other side, we wrote Shyam account. Write down that. As bank account we debited, amount should be in bank column. 3,800. Come to the last transaction. On 31st date, salaries 1,000 rupees. Firm paid salary. To whom? to employee. From the firm, cash is going. Even though employee's name is given in the question, we need not to consider that name as an account because salary is an expenditure to the firm. In case of expenses and incomes, that expenditure name and cash account, these two only we should consider. To whom we are paying that expenditure or from whom we are receiving that income, those person names are immaterial to us. Expenditure name is salary. Salary account is one account. Cash is going on. Cash account is another account. Expenses come under nominal account. Cash is a real account. Debit all expenses and losses, credit all incomes and gains. Salary is an expenditure to the firm. Debit salary account. Debit what comes in, credit what goes out. Cash is going, credit. Final entry is salary account data to cash account. Out of these two accounts, cash account we are preparing here. Cash account is credited. Therefore, on credit side, we have to post this entry. On 31st date, in particulars column, other side, we wrote salary account now, write down that. By salary account. In cash column, 1000 rupees. Posting work is completed. With the help of journal entries, we have posted all the transactions in cash book. Without using journal entries also, we can post all the transactions in cash book. For that, you have to remember some important points. In triple column cash book, we are preparing two accounts now. Cash account, bank account. First, let us see about cash account. Cash account is a real account because cash is an asset. Real account rule, debit what comes in, credit what goes out. Think from firm's point of view, cash is coming into the firm. If cash is coming into the firm, we have to show that transaction on debit side of cash column. If cash is going from the firm, we have to show that transaction on credit side of cash column. For cash column, remember these 2 points. Come to bank column. Bank account is a personal account. Personal account rule, debit the receiver, credit the giver. If banker is a receiver, means in our bank account some money is going to be deposited. Then what happens to our bank balance? Bank balance increases. So if banker is a receiver, our bank balance increases and it comes on debit side of bank account. Credit the giver. If banker is a giver, it gives the meaning that from our account money is going. So our bank balance decreases. If banker is a giver, our bank balance decreases. So remember these 4 points. In one business transaction, if cash is coming into the firm, that transaction should be debited to cash account. In one business transaction, if cash is going from the firm, that transaction should be credited in cash account. In one business transaction, if our bank balance is increasing, that transaction we have to post on debit side of bank account. In one business transaction, our bank balance is decreasing, then that transaction we have to post on credit side of bank account. From this point of view, let us see the problem again. Prepare triple column cash book. Starting date, he has given cash in hand, cash at bank now. These two are opening balances. Don't apply these rules for opening balances. For opening balances, always the rules are, those two are cash balance, bank balance, both are assets. Therefore, debit side we have to show. For transactions, we can apply these shortcut methods. Third date, sales. Firm sold goods. This is cash sale. Therefore, immediately customer paid cash to us. cash is coming. We have to think from firm's point of view, no? Because in firm's books only we are preparing triple column cash book. Cash is coming. So which side we should write? Debit side. In which column? Cash column. See, 4,000 rupees. What to write in particulars? This is sales transaction. Therefore, write down to sales account. Next, cash received from Sunitha, discount allowed. From Sunitha, cash is coming, 6,800. As cash is coming, debit side it is appearing. 6,800 cash is coming from Sunitha. Write down Sunitha in particulars column. As discount is also given in discount allowed column, write down the discount amount. Next, commission received. From a party, we received commission. Cash is coming, so debit side it comes. Cash is coming, debit side cash column 800. Here, that income name, commission received account. Cash deposited into bank. From the firm, cash is going into the bank. So in which side cash column? When cash is going, credit side cash column it appears, no? 2,000 rupees cash is going from the firm. Similarly, we are depositing this 2,000 in our bank account. So bank balance is increasing by 2,000 rupees. If bank balance increases, in bank column debit side we have to write now. See here also we wrote. I told contra entry 2 times it comes. As cash is going, credit side cash column we have to write. As bank balance is increasing, debit side bank column we have to write. In LF number, write down CC. And in particulars what to write? Without using journal entries we are posting now. So the hint is, in which column we wrote this 2,000? In bank column. Therefore, here you have to write cash account. In which column we wrote this 2,000? In cash column. Therefore, here we have to write bank account. So remember, if you write amount in cash column, in particulars you have to write bank. If you write amount in bank column, in particulars you have to write cash. Contra entry in this manner you can post. Next transaction, on 14th date, check issued to Murthy 9,600, discount received 400. Firm issued check to Murthy. Murthy goes to our bank. From our bank, he is taking that money. After this transaction, our bank balance decreases. If bank balance is decreasing, credit side it appears, no? So credit side, bank balance is decreased by 9,600. Write down that. Discount received 400. To Murthy we issued this check. Write down his name here. Next, on 17th date, withdrawn cash from bank for office use. From bank, we withdrew money. Cash is coming. When cash is coming, debit side cash column it appears 1,800 rupees. From bank, we withdrew money. So bank balance decreases by 1,800. When bank balance is decreasing, credit side bank column it appears. In LF number, write down C and C. In particulars what to write? As we wrote the amount in cash column, what is the other word? Bank account. As we wrote the amount in bank column, other word, cash account we have to write here. Goods purchased from Rohith. Here, cash is not coming, not going. Bank balance is not increasing, not decreasing. Therefore, ignore this transaction. Next one, received check from Shyam. Shyam's check deposited in the bank on the same day. So, we received check from Shyam. We deposited the check in the bank on the same day. Bank balance increased because bank collects money from Shyam's bank. It will be deposited in our account. Bank balance is increasing. So, debit side bank column. From Shyam we received this check now. Write down his name. Salaries. Firm paid salaries to employees. From the firm, cash is going. Therefore, credit side cash column. Cash is going by towards salary. We paid that amount now. Write down by salary. So I am not using any journal entries in this method. Only 4 points you have to remember. If cash is coming, debit side cash column. If cash is going, credit side cash column. Because of a transaction, if bank balance is increasing, debit side bank column. If bank balance is decreasing, credit side bank column. So only by observing these 4 points also, we can post all the transactions in cash book. But remember one point, journal entries are the basics for a commerce student. Always it is better to use the journal entries while preparing triple column cash book. Because in your coming classes also, you are going to use these journal entries again and again. While using any journal entry, if you get any doubt, in that case you can use this shortcut method. But don't completely depend on shortcut method. So posting work is completed. After that, we have to do balancing. Procedure is two sides. We have discount columns now. Discount columns we should not balance. We have to total them. Why? I told you. I prepared one video on cash book. In that video, clearly I mentioned why these discount columns are to be total, why not balanced. Watch that video to know about this point. So discount column, instead of balancing, simply put the totals on two sides. Come to cash column and bank column. Cash column, observe which side total is more. Debit side total is more than the credit side total. Put the debit total in rough notes. 23,400 minus credit total 3,000 rupees. 20,400. We said we should write this balancing figure. As credit total is less, credit side we have to write this amount. 20,400 in cash column. For that, date should be last date of the month. December month the problem is given to us. In December month, last date will be 31st. 31st December 2018. By what to write for answer? Balance carried down. Two sides put the totals. Which amount? Debit amount. 23,400. Credit side also 23,400. Now come to bank column. Observe, which side bank column total is more? Debit side bank column total is more. Debit total is 13,800. Credit total is 11,400. Difference 2,400. As credit total is less, credit side we have to write this amount 2,400. Two sides put the total. Which amount? Debit amount. As you are a student, only for December month he asked you to prepare this account. But when you work in any organization, every month you have to prepare this account. So next month, that is January 2019. For that month, you have to continue this account. Credit amount, you have to bring on debit side. Date should be next immediate date of this date. If today's date is 31st December 18, then tomorrow's date will be 1st January 2019. What to write in particulars column? We are bringing these balances now. So write down to balance brought down. In cash column, cash balance 20,400. In bank column, 2,400. With this, triple column cash book is completed. Now what is the meaning of these answers? Let us see. On starting date of December month, in our firm, we have 10,000 rupees cash. In December month, we received 4,000 rupees, 6,800, 800, and 1800 rupees into our firm. So we received 23,400 rupees. And in December month, from our firm, 2000 rupees, 1000 rupees. Total 3000 rupees cash outflow is there. So we received 23,400. From that, we paid 3000 rupees. Finally, at the end of the month, we have 20,400 rupees cash balance. Owner should open the cash box and he should physically count the cash. How much cash should be there on 31st December 2018? 20,400 rupees. In that case, the meaning is there is proper control on cash. If there is a difference between physical cash balance and cash balance as per accounts, then accountant or cashier becomes answerable for that. Similarly, come to bank column. Debit side, bank amounts meaning is on 1st December 18, we have 8,000 rupees bank balance. During this December month, we deposited 2,000 and 3,800. In December month, from our bank account, we withdrew 9,600 and 1,800. Finally, at the end of the month, in our bank account, how much money should be there? 2,400. Bank also maintains accounts now. So banker maintains our account in their ledger book and they give one passbook to us. So according to passbook also, 2,400 bank balance should be there on 31st December 2018. Because same bank transactions we are writing in our triple column cash book and bank is writing in its ledger book. Therefore, on any day, the bank balance as per cash book and passbook should be the same. If these two amounts differ, if there is any disagreement between the bank balance as per cash book and bank balance as per passbook, then by comparing cash book and passbook, we have to locate the reasons for that. And whether we have located all the reasons or not, to confirm that, we have to prepare bank reconciliation statement. That is totally another topic for you. And remember one more point. In case of cash column, always debit total should be more than credit total. Because debit side we are writing receipts. So how much we receive, from that amount only we pay, no? Credit side we are showing payments. So payments cannot exceed receipts. If you have 100 rupees with you, how much you can spend? Less than 100 or equal to 100. But can you spend more than 100 rupees? Impossible. So remember, in public examination, while doing this problem, in case of cash column, if debit total is less than credit total, then the meaning is you did some mistake. You have to rectify it. In case of bank column, if it is favorable bank balance, then debit total will be more, credit total will be less, 99%. Suppose he has given overdraft bank balance in the question. In that case, credit total will be more, debit total will be less. So this is all about triple column cash book 8th problem. Hope this video is helpful to you. Thank you.